about the longer term take rates and sustainability over there. Back to you.
Okay, thanks a lot for that. Well, Samir Bhise, who tracks this stock very closely and of course who tracks the sector, joins in now. Samir, your thoughts? What are you expecting from the buyback this time around?
Yeah, hi. Good morning. I think it's a good way, probably after the kind of price performance we have seen over the last 1 year. We upgraded Paytm a week back or so. Our view fundamentally has been that valuations were not supporting all through last year. However, as we stand today, Paytm has kind of corrected significantly. Their execution, if you ask, has surprised most people, especially on the distribution piece. As it scales up over the next 6 to 8 quarters, we think it makes for a favorable risk reward on the name. Longer term questions, and as we had highlighted in our report last year also, that take rates could probably normalize at lower levels than what they are seeing currently. But I think the momentum right now is quite strong. The operating jaws with respect to costs are narrowing, and which should see EBITDA margin improvement, and that should drive stock price. They have also kind of borne the brunt of what's happened with global fintech names, but some sort of semblance of stability with respect to even what's happening on the global side, I think makes a case for possible trade over the next 3 to 6 quarters on Paytm. Specifically with respect to buyback, I think it's a good signal that probably the incremental cash burn may not be at the same rate as was the case, say, 12 to 15 months. So that should give some comfort, though we will wait for exact quantums. I believe the number could be anywhere between 20 to 30 billion. I am not sure what amount the board will decide today. Though we think it's a good signaling mechanism to existing shareholders. Fundamentally, our view remains that over the next 3 to 6 quarters, you should see continued momentum on distribution. Medium term, we will closely watch how take rates evolve on the distribution side.
Samir, there's no chance that the buyback promoters participate, right? I mean, they can't be so out of touch. I mean,
no. I would rule that out, frankly.
Okay, we're just coming back to you, Samir, in a bit. We'll take a quick break here. We have to. There's 5 minutes to market opening. I think we'll come back with... Okay, let's just take our calls, 9-10 calls as well. And Sudarshan and Mitesh are with us. Sudarshan, what do you have?
Buy the Nifty. Buy Coal India with a stop under 228.
Okay, and Mitesh, how about you?
I'll go with the buy on Nestle with a stop below 2275 for targets of around 20,950.
Okay, just a couple of more stocks that I want to mention in pre-opening. Tata Motors is up almost about 1.5% after the stake sale in the subsidiary Tata Tech. So that's the big nifty gainer right now. In the broader markets, KEC International, it's on the back of an order win, the stock is up almost 6.5%. And BGR Energy is the one. They've also received an order worth 330 crores. So that stock is also looking pretty good. But you had a question for Samir?
No, I think that's interesting points that Samir made, Sonia, earlier. Yeah. Now, Samir, PSU Banks is another space you track, right? And, for many of these banks, we are... Now, price, of course, is not... SBI is at the new highs, but others are not. Very far away from price-wise earlier highs. But if you look at price to book, 1 year forward multiples, most of them are back at peak levels, which were made many years ago. Your thoughts, Samir, from here, and which ones look the best placed?
So we've backed some of the larger PSUs, especially SBI, Bob, Canara, over the last 12 months. I think on the smaller name, there is more of a catch-up going on, especially given that it's more system-driven, or external environment is such that the key concerns which market has had on these names for last, say, decade or so, there is no stress creation, in fact, of meaningful order, which is why everyone is benefiting. But as a franchise, we would still prefer to be with the larger ones. SBI continues to be our preferred play. Even there, I think at some point in time, we will have, say, maybe there is around a 10 to 15% upside on our fair value for SBI. But what one needs to realize is that the stock performance is more driven by how the environment is, given that these banks do not have baggage of stressed assets. Margins have been favorable, likely to be favorable in third quarter also. What is critical is how origination is shaping up, and that will be clear over the next 12 to 15 months, and how the deposit franchise shapes up. There has been significant under ownership of these names, which has also led to this rally. I think 2023 generally we would want to see banks which deliver strong on deposits, quality of deposits. That will be the outperformers, is our view.
Okay, all right. Samir, final question before we let you go. On Paytm, you said you'll upgraded the stock, I think, in the recent past. What's the target price you have out there?
We have a target price of close to 600, as far as I recollect.
Okay, Samir, thanks a lot for joining in. Well, the pre-opening rates, a couple of rates, we're just waiting for them to settle. Looks like the market is going to open with a minor positive tick, up almost about 27 odd points. It's all the Tata Group stocks that are doing well. Tata Motors, Tata Steel, Tech Mahindra. There's, of course, news flow there. The Bajaj twins are also looking good, Bajaj Auto and Bajaj Finserv. But Dalmia Bharat is definitely the one in focus post the deal yesterday. What are brokerages saying, Nigel?
Well, in terms of Dalmia Bharat, most of them are positive actually with the details that they have. CLSA, they have an outperformed rating. They've increased the target price to around 2,100. They say the deal can address two aspects for them. One is the geographical concentration risk. Earlier, they were only in North as well as South. Now that gets sorted out. And that journey towards that 110 million ton capacity, well, that's well and truly on. By 2027, remember, they have been talking about 75 million tons. Morgan Stanley, they have an overweight as well. Target price at around 1,900 rupees, which in fact, it's already crossed. They say this will help them diversify their geographical footprint, and it also makes them a pan-India player. Though almost all brokerages, they're still waiting for clarity. What is the timelines for this for closing this out? How do they fund this? And what are the potential synergies? That's a question mark as of now. Jefferies, they have a target price of around 2060. They written an elaborate report just around 10 days or so ago when the company, in fact, was on a roadshow. They say if the acquisition fructifies, it will enable the company to make a good entry into central region. So for the time being, the stock opens with a gain of around 1%. There are question marks whether the deal gets sorted out. So let's see whether or not it can hold on to that.
Okay, well, just keep an eye out on Kotak Mahindra Bank as well. The company holds 10% stake